Hi, Karen Dice here, publisher of Mortgage Currency magazine, and here are some of the rule and regulation updates that occurred between January 10th and February 10th, 2017. Okay, so it is no secret that the cancellation of FHA's annual MIP decrease wreaked havoc in the mortgage industry. Not only did loans have to be reprocessed and reissued CDs and a slew of disappointed borrowers, it's a lesson that rules can be changed in an instant. So over the years, I can only recall a handful of rules that were supposed to go into effect that were never made it or changed at the last minute. Which brings me to the VA notice that came out on January 23rd, where they instantly changed the way LOs and underwriters need to figure student loan repayments. So for student loans where the veteran proves that it has been deferred more than 12 months from the closing date, and the key word here is the closing date of the loan, then the student loan payment does not have to be counted. If it's within the 12-month time period, it's 5% of the outstanding balance divided by 12, but there are a couple other rules that apply, so subscribers can throw away the old student comparison chart that compared FHA, VA, USDA, Fannie, and Freddie, and download the new one with the new VA rule. So next, a couple honorable mentions from Fannie Mae this month. They've published a list of updated validation service vendors. And next, due to the lack of appraisers, Fannie is allowing appraiser trainees to submit appraisals without the signature of a supervisory appraisal, which could be good or could be bad. And for new condo projects or new subdivisions, this is really kind of cool. 2 pending sales can substitute for 1 closed deal when additional appraisal comps are needed. So next, let's talk about Freddie. And effective April 1st, subscribers are going to find a new LPA fees for borrowers without credit scores. But another big change that is quote-unquote supposed to occur in April, may or may not want to count on that, if LP accepts the borrower without a credit score, then it does not have to be underwritten manually. Now they've outlined the types of loans that qualify, plus a list of additional documents that must be included in the loan file. But basically it's going to help those borrowers where one borrower has a credit score and the other one does not. Okay, on to USDA. USDA previously would only allow financing for new manufactured homes, but they've instituted a pilot program to finance existing manufactured homes. Now it's being tested in 8 states right now, so if you're interested in expanding your niche to include this housing type, here are the 8 states that are now under the pilot program. Colorado, Louisiana, New York, Ohio, Texas, Vermont, New Hampshire, and Wyoming. And then finally, Tammy Butler, Fair Lending Diversity and editor of Mortgage Currency, has written an article called Understanding Pricing Gibberish. Where does the money come from? This is not only a good refresher course for you to explain to clients and real estate agents, but it's great information for new loan officers too. So thanks for viewing, and why subscribe to Mortgage Currency? Because getting a loan approved and closed these days is rocket science.